When most people think about the stock market, they imagine chaos. People shouting, screens flashing, trades happening in seconds. But that version of the market? It's mostly gone. Today, everything happens online. Anyone can buy and sell stocks from their phone. So why do so many people still struggle to make money? It usually comes down to one mistake: not understanding the difference between trading and investing. Quick test. If you had $1,000 today, would you try to double it quickly or grow it steadily over time? Your answer already says a lot about whether you're thinking like a trader or an investor. On the surface, they look similar. Both involve buying and selling assets. But the intent behind each is completely different. An investor is building wealth over time. A trader is trying to generate profit from short-term price moves. Same market, different game. Investing is about patience. You're thinking in years, sometimes decades. You're betting that a business will grow and become more valuable over time. Short-term price drops? They're just noise. Trading is the opposite. It's focused on the short term, minutes, hours, days, or weeks. The goal isn't long-term growth. It's to capture small price movements consistently.
Here's a key idea that separates the two. Price is what you see. Value is what you believe it's worth. Investors focus on value. They ask, is this company strong? Will it grow? Is it undervalued? Traders focus on price. They ask, is this moving right now? Can I profit from that movement? They don't need the company to be great. They just need it to move. Because of that, their strategies look very different. Investors study financial performance, business models, industry trends. They're trying to understand the big picture. Traders often rely on charts, patterns, technical indicators. They're reacting to behavior in the market, not necessarily the business itself. This is where things really separate. Investing mindset, patience, discipline, long-term thinking, comfort with slow progress. Investors are okay waiting. They trust the process. Trading mindset, speed, precision, emotional control under pressure, high tolerance for uncertainty. Traders must act fast, often with incomplete information. And here's the problem. Most people think they have the trading mindset. But when the market moves against them, they hesitate, panic, or second guess. Most beginners don't actually choose between trading and investing. They accidentally do both. They buy a stock thinking long-term, then panic and sell when the price drops. That's not trading. That's not investing. That's reacting. And reacting is where most losses happen.
Let's be honest. Trading is exciting. Fast decisions, quick wins, the idea of turning a small account into something big. And online, it's often made to look easy. But what you don't see is what's happening behind the scenes. Trading is one of the most competitive environments out there. You're competing with full-time professionals, large institutions, advanced algorithms. They have better tools, faster execution, and more data. And historically, many short-term traders struggle to outperform the market over time. On top of that, trades are frequent, margins are small, mistakes are costly. Some even use leverage, which increases both potential gains and losses. And here's the part most people don't realize. Even if you make money in the short term, that doesn't mean your strategy will work long term. Now, to be clear, trading isn't bad. It's just a different skill set. There are people who do it professionally and successfully, but it requires time, experience, discipline. And most people underestimate how demanding it really is. Investing takes a different approach. Instead of trying to win every move, you focus on staying in the game. You benefit from business growth, economic expansion, long-term trends. It's slower, but it's more forgiving.
So how do you decide? If you have limited time, prefer stability, want to build wealth steadily, investing is likely the better path. If you are willing to treat it like a skill, can handle higher risk, and commit serious time to learning, then trading might be something to explore carefully. Think of it like this. Trading is like sprinting, fast, intense, and demanding precision. Investing is like running a marathon, steady, consistent, and built for endurance. Most people don't fail because they chose the wrong strategy. They fail because they chose a strategy that doesn't match their mindset. In the market, it's not about moving fast. It's about staying in the game long enough to win. This content is for educational purposes only, not financial advice. Always do your own research before making any investment decisions. If this helped you understand the difference between trading and investing, like the video and subscribe. It genuinely helps the channel grow and allows me to create more content like this for you.